Well, good morning. It's Michael Douville, and I'm going to tell you today is Saturday, March 20th, 2021. As you can see on my screen, one of the concerns that I have is that there is so much money available in the money supply. Now, the title of this video is We Have Had an Incredible Run-Up into Real Estate Prices Across the United States. In the select markets of Florida, Texas, and Arizona, prices have just skyrocketed. And of course, if you'd have bought property a year ago or 2 years ago, you would have made a lot of capital gains. You would be sitting pretty to be very, very happy. The question then becomes, should we cash some of these chips in? Well, one can never go broke taking a profit. However, there's going to be an optimal time with which to really sell into the marketplace. And it's kind of a timing issue, so we need to really talk about what the timing issue is going to be. Now, again, each one of us is individual, so you really want to involve your spouse and your financial planner, your tax consultant, because there may be some tax ramifications when we actually do go ahead and sell some of our portfolio, because typically we don't. Typically we want to trade it, we want to keep it for long terms, but we're going to come to a point where we're going to want to sell part of our portfolio and either pay off the debt on a portion of the portfolio so it's free and clear, or we're going to bank because the market is going to complete, our cycle is going to complete. Now, one of the things that concerns me here is this article that you can get from Zero Hedge. You know, Zero Hedge is such a wonderful source for economic news, is that 39% of all the dollars created have been created last year. Now, the Federal Reserve was created in 1919. They've created 39% of all the money ever created in the last 100 years was created last year. Now, it's not into money supply yet. So you get a money supply, but it's not into the economy. So really, you start seeing inflation when you start seeing the velocity of money. So when you start seeing the velocity of money, where money is really starting to change hands, that's where you're going to start seeing inflation. However, the potential for it and resources for it is absolutely positively there. Let me just move to the next slide here so you can see what we're talking about. Again, this is a Zero Hedge slide from Bloomberg. And you can see, let me see if I can move this down a little bit. You can see where this has spiked. You can just see 2020, this huge, enormous spike in money supply. So not only here in the United States, but you know, the United States floods the world with dollars because the world's economy works on dollars. And you know, the U.S. economy is, or the U.S. dollar is the world reserve currency, and they need to have the liquidity of the dollars into the economy so that we can transact commerce. So it's certainly there. The potential for inflation is certainly there. Now, we've talked about on a couple other videos how for the last 2 decades, we have had very, very benign inflation. However, even with benign inflation, we've lost about 40% of our purchasing power in 20 years. Now, if we start to see inflation come in and any kind of even a moderate increase in inflation, you're going to see your purchasing power be eroded quickly, which means that we really need to have some kind of a inflation hedge for ourselves. Residential rentals, of course, probably the best inflation hedge you can possibly get, because they'll always go to market. So as the market is going up, your price of your rental is going up. And what's even better is that the rent is going up as well. So you're maintaining your purchasing power. One of the concerns we have, of course, is if we start selling our portfolio, is that we're going to lose that shelter that we get from the inflation hedge of our real estate. So it's kind of a two-edged sword. It's kind of a timing issue. as to what is going to be good and what's not going to be good timing. This is why it's really optimal that we know who you are and what your position is, what your other assets might be. So we regularly talk to financial advisors and clients to try and find out what's going to be best for them, particularly on an integrated asset approach, so we can really look at the whole portfolio. But let's just take a look at where our cycle is at here. Here again, you can see this enormous run up. I mean, this is a historic run up in the money supply here in 2020, and it continues into 2021. The money supply just continues to expand. Now, we run a timing model. It's an 18-year real estate timing model. It's been very, very accurate. It doesn't mean that it has to continue to be accurate. You know, sometimes it can be distorted by government actions. I mean, we could have a Mad Max event. We had the shutdown that came in, and we had actually forecast a little bit of a correction, a double correction. We had a correction. We forecasted the March 2018 correction to the month, and we thought that we might see one into 2021. We didn't expect it to be or into 2020. We didn't expect it to be as strong as it was, but that certainly was there. And it was, even though it was cyclical, it was really magnified by the government action. So there is a possibility that the government action could really distort this. But barring a Mad Max event, I think this is a pretty good cycle. So where are we in a cycle? I think here is 2018. This was definitely, we saw that on our chart, came down to like 2019, popped up 2019. We thought that we're going to have a little bit of a correction into 2020, not knowing that we're going to have a COVID collapse in the marketplace. It came down, and then we started right back up. And here in housing was really not terribly impacted. We had a couple, 2-3 months of uncertainty more than anything else. And then housing prices started moving, and the rest is history. The major markets of the United States, of course, Florida, Texas, and Arizona, have done exceptionally well. And we've been into this accumulation phase. And the accumulation phase typically runs for about 12 to 18 months. I believe we're still in that accumulation phase. But here is where I think we're heading. I think that this is probably looking into 2022, right about here. And I think we are going to complete the cycle. And of course, remember, a completion is not a point in time. Completion is going to be over probably a 6 to 12 month period. And I think that completion time is probably going to start late 2023, could be early 2024, and could go on for 6 or 12 months. And it'll be a topping process. And I'm looking in, so I think that the optimal for us to consider now, depending if you're a multi-property owner, you can certainly start selling into some of these things here. You cannot go broke taking a profit. If you feel that this is something that you want to do, you're certainly welcome to brainstorm with us. You're certainly welcome to have your financial advisors and your spouse, and we can all brainstorm and see what's going to work best. But I think we're going to want to start selling a lot of our portfolio here late 2022, early 2023, and just getting ready for the completion of the cycle, because I do think we're going to top into 2023 to 2025 timeframe, and we'll know better once we get there. But this will be a topping process, and then it's going to complete. And I'm not sure, we'll know how much of a discount that's going to be placed when we start looking at this. But we're going to have a completion of the cycle, and this is typically about a 4-year completion. And this is going to take some time. Again, if it takes, maybe I shouldn't say 4-year completion. This is going to have a pretty drastic drop, probably 6 to 15 months, and then we'll have another 3 months of bottoming, and then we'll start the cycle again. This, of course, would be a time when you'd want to start maybe picking away and starting to buy a few properties. So, and then the cycle will start again, and we'll make a lot of money. So I think, to reiterate, I think we're here. I think that we've had a really, really strong run up in prices. I mean, a really, really strong run up. I'm getting lots of people asking me, should we sell? And of course, you cannot go broke selling. So if you've got a really good profit, if you need the money, if you know, it depends on who you are, how old you are, what your risk appetite is, you can certainly start thinking of selling these. I would advocate that in the next maybe the next year to 18 months, we're going to want to start selling part of the portfolio. But in the meantime, we're still in the accumulation phase. So it's probably, as hard as it is to imagine, prices are probably still going to go considerably higher from here. And of course, the reason I showed you that money supply is that the fuel is certainly there for it. So there's plenty of money supply to fuel a really large run up in real estate asset class, and it's certainly there. It's historical, and you could if you sold now, you might leave a lot of money on the table. But again, depending on who you are, you certainly want to talk to your financial advisors. And if you've got 10 or 15 or 20 properties, maybe you want to sell one or two of these and say, well, I was early, but we took some money off the table. So we're here to help you. You're welcome to reach me at michael@michaeldouville.com. I'm in the corporate office a lot at 602-942-4200. You can reach me at creatingwealth@westusa.com. And we'll certainly schedule a time when we can get together and see what's best for you. And we'll bring in some staff, and we'll do whatever is best for you and execute your plans. So my very, very best to you. Let me see if I can get this down. There we go. My very, very best to you. If I can help in any way, you know that I will, and I'm here for you. We'll talk to you later. Bye-bye now.